Welcome to Derivatives and Finance by Professor Narendra Kumar Nigam. I'm Kushal Sachdeva, and today we'll be talking about the basics of investing. According to a survey, only 27% of adults in India are financially literate. This means that only a small percentage of our adult population actually has the knowledge and the skills required to invest their own money. But intuitively, if we think about it, all of us invest in different kinds of assets. So maybe some of us would have purchased our own houses, maybe some of us would have put that amount of money in a bank fixed deposit. But it is important for us to understand what exactly is the purpose behind each of these investments so that we can manage our money more effectively. This is exactly what we'll be covering in today's video. Why do you need to invest? This question should come naturally to your mind. What if I just kept my money with myself and I did not invest it anywhere? So let's imagine a scenario where you have 100 rupees. With these 100 rupees, you can choose to buy 10 pens worth 10 rupees each. However, 1 year down the line, this might not be the case anymore. Here, we talk about this concept of inflation. Inflation, very simply, means that 1 year down the line, things will become more expensive. This is something that all of us have witnessed. So imagine an inflation rate of 5%. So 1 year down the line, each pen will cost 10.5 rupees. This means that in order to buy 10 pens, you will now need 105 rupees. So the purchasing power of your money has decreased. But I do not want this to happen. I want that I should be able to purchase the same number of pens with the money that I earlier had. Here is why we need to invest. So what do we do now? Suppose we put this money in an investment which gives us 10% return annually. So 1 year down the line, I will now have 110 rupees with me. With these 110 rupees, I can buy 10 pens and I'll still have 5 rupees left over. This is sort of my reward for investing. Talk about where you should be investing. So let's take a hypothetical example where you could just put your money in the bank and the bank would give you 10% interest annually on your investment. Understand that this is not the case right now because banks typically offer you 5 to 6%, which is lower than what the current rate of inflation is. So this might not be a good investment for you. So where exactly should you be investing? You should look for an investment which gives you your desired rate of return. Here, we can talk about different kinds of investments. Let's talk about something that might be something that you're familiar with. So if you choose to invest this amount of money in, say, real estate, or you purchase a house, you will earn money in two ways. The first way would be your rental income. So if I buy a house worth 1 crore rupees, I'll get 1 lakh rupees as rent each month. This means that 12 lakh rupees is my rental yield from that property worth 1 crore rupees. Also, my house will appreciate in value over time. So as we know, if we purchase a house, some years down the line, it will be worth more than what we purchased it at. However, not all of us have this initial capital of 1 crore to invest in buying an asset. So what should we do? We should ideally look for an investment which fits the capital criteria that we have and also fits our desired rate of return. An ideal example here would be stocks. So a stock or a share is basically a small ownership in a company. So if I own one stock of Apple, this means that I own a small part of Apple. But how do I make money from this? I can make money from a stock of Apple in primarily two ways. One would be my income in the form of dividends. This means that if Apple makes, say, 1 crore rupees, they will distribute some of that money back to the shareholders in the proportion in which they already hold the shares of the company. The second way, if we refer back to our initial example, would be the stock of Apple appreciating over time. So as the value of Apple increases over time, the value of my individual stock unit will also increase. This might be better for you in terms if you compare it to other investments because A, you do not need to actually actively manage the investment. The company will run by itself. You do not have any part to play here. And also, the initial investment required to buy one stock of Apple is far less than what you would have had to invest had you chosen to invest the money in real estate. So now that you've decided to invest, how exactly do you go about buying a stock? Earlier, the process was very complicated. So in essence, you would have to go to a person who would act as an intermediary between you and the institution that the stock that you're buying. This person would be called a broker. This person would help you buy the stock from the company that you're looking to buy a stake in. However, now the process has become very simple. All you need to do is you need to have a demat account. A demat account is basically something that helps you to store your shares in an online space, in a digital form. So instead of having a paper certificate that certifies that you own this share, you can now do so in an online form. In order to open a demat account, you can choose to go with a wide array of service providers. So you could go with a new age company like Grow, Upstocks, or Zerodha, but you could choose to go with some names that you might be more familiar with, such as HDFC, ICICI, or Sharekhan. The process to open a demat account is very simple. If you need more information as to how to go about it, we'll be happy to walk you through the process. First, open the official website of Zerodha either through your phone or desktop. We will share the link for the same in the description. Now you have to sign up with your mobile number. After doing this, you will receive an OTP for the verification. Now you have to provide your email and name. After this, you will receive an email for verification. The registration process starts with your PAN number and date of birth as per PAN card. Click Continue. This step involves paying the account opening fee. You will be required to pay Rs 200 as account opening charges. The payment for the same can be done either through UPI or card or net banking. You have to select the payment process and click on Continue. For this video, we are paying through the card. Once the payment has been verified, the next process is Aadhaar eKYC. Here, KYC will be done through DigiLocker, for which you will be required to type your Aadhaar number. Click Next. You will receive an OTP on the Aadhaar linked mobile number for verification. After allowing access, it completes the KYC process. Now, you have to provide details about your profile regarding marital status, parent's name, income slab, which is your annual income, occupation, and some other important aspects. Also, you have to provide information regarding the settlement duration as well as the trading experience. The next question is if you're a politically exposed person, for which you'll have to answer either in the affirmative or the negative. In the next step, you have to link your bank account. This can be done either through IFSC code or UPI. For the IFSC,
you will have to provide branch IFSC, MICR, and your bank account number. Next, you have to confirm the terms and conditions of Zerodha. The next step is webcam verification. For this, you will have to click your picture in the same way as it is shown in the picture. For this, you'll have to write the particular number on a blank sheet and click a photo where your face is clearly visible. In the next step, you have to upload your documents. This includes income proof, which is optional. This can be done using any of the following documents: your signature or your PAN card. The form is complete. The last step is to e-sign it. After clicking e-sign, you will be redirected to the NSDL website. After accepting the terms and conditions, you will have to provide your Aadhaar number or virtual ID. After that, you will receive the OTP. After verifying the OTP, the documents are e-signed. Finally, you have to click on Finish. After the application is complete, the Zerodha team will verify the documents and will send you the login credentials on your mail. This will have your login ID and password. After getting the credentials, you can download the Kite app and log in with the credentials. Finally, you're now ready to invest.